Good afternoon. This is Todd Horwitz coming to you from the floor of the CME Group in Chicago, and we're going to continue to watch these 30-year Treasury bonds yielding now 2.7%. And of course, what we're seeing here is what I would call a blow-off top. We look at these markets, and you get so much enthusiasm and so much fear driving these markets higher that I think today we saw what we would call a blow-off top. This is when price and time become, irregardless, nobody cares, they just got to get out. And I think that's what you saw. It was more of a panic trade. And when we see this panic, this is typically the end of that particular move. This is something that we continue to watch as we've been watching these bonds all along. We've continued to see them try to drive higher and drive higher. No matter what the Fed does, no matter what the interest rate talk is, we've seen either a run for safety or knowing that rates are not going to be hiked, all sorts of reasons as to why. But I think now what we look for, what's next, is we see that these bonds have now rolled over to December and we're trading in the mid 156s. I think this is now the opportunity. Although we've been wrong up to this point, we've seen continued higher prices. We have not exactly exploded to the upside. I think that's the important thing to look at here when you look at these markets, is that yes, we have been wrong and we thought they would top out earlier, but they continue to push higher, but they're not going up. We've gone from 154 to 156, so it's not like it's been a major tragedy as they went higher. It's not good, it doesn't feel good, but at the end of the day, I think here is a great level now to start selling some and putting some pressure on the market. I think that you're going to see a market that's going to start to break here. You've got no reason to fear, and of course, the Fed and everybody else keeps telling you how great the economy is, and so if the economy is so good, why can't they hike rates? So I think what's going to happen is they're going to be forced to hike rates. I think that the fixed income traders are going to force them themselves by pushing prices down, and I look to be a seller. So here we're definitely going to sell and add to our short position, looking at the mid 156s, as high as 157 or as low as 156. That's where we're going to be sellers and look for these markets to finally break. Again, we've looked for this bull market to be over, and we still have not put back in the highs that we made originally. This is just simply what I would call a rally into a market that wants to sell off. So look for an opportunity to sell here somewhere in the 156 level. 156.16 would be great. But overall, we look for these prices to drop dramatically and expect them to do so. That's the way I see it. This is Todd Horwitz, coming to you from the floor of the CME Group in Chicago.